Alright, I don't know. I just want to make this video, and I feel like most of the video that I saw about this split seems to be, very mixed. And honestly, I have got out of AMC the minute that they announced 8, because I just felt like it was a grift at that point. And sorry to say that I think the movement is dampened by the actual CEO, and I've had that suspicious for a while, because of the whole dilution thing, and come to find out, the run up to 72 was actually him diluting the share, right? That's why so many shares are on the market or trading in the market, because before that there were he was diluting the shareholder by fivefold, right? Meaning that it used to be 100 million shares, and then he increased it to 500 million shares, as we see today. Now, I apologize if I'm ignorant on this topic. Stock market is just a topic that I have becoming, aware of and become obsessed with a couple of years back. And so I'm not an expert. I don't have any credential to back me on this. So please take this video as my opinion and my opinion only, and not a financial advice, right? I'm just trying to document my own journey in this crazy world that we're living in. And there's a lot of, as I said before in the previous video, the first one that I made, you've seen a lot of manipulation, in the market and all that stuff. And if you follow the whole squeeze movement, I feel like there's manipulation on both sides. The people who want you to invest in a certain company versus the people who want you to sell a certain company and buy another, right? And you have to question the motivation of everybody, including me. Why am I making this video and all that stuff? So I know, there's a lot of reactionary video out there concerning this this recent news about the stock split, right? And to me, I don't think it's good for retail. But watching Market with May here, I've been watching her video a couple of times before, when she was talking about GME and AMC as well right here. It makes sense to me a little bit that, yes, Adam Aron is trying to do his best to make the company better. However, my concern is that, is it going to be enough? Because it seems like he's about to dilute shareholder even more. Now, I know there's there are a lot of people who think that, there's a market mechanic here that we don't understand that is going to make this better for retail, better for the short squeeze thesis, right? And I'm willing to listen. I listen to Boss Blunt, I listen to Bigums, I listen to everybody who, the traditional AMC supporter, and again, I used to be an AMC supporter too, but when they issue, I think, like when the CEO announced that, oh, it's going to be a pounds, just watch. What was the pounds? Apes, right? And to me, I feel like the 8 pounds was a distraction from GME stock split, the 4-to-1 stock split, and that whole debacle. They want people to not pay attention to that. That was actually a good thing for the company. But we're not talking about GME right now. I will make a video later about that. But let's get into this video here. I don't want to make too long of a rant here. So Market with May is about to explain, and I totally recommend you go to watch her video fully. She does an amazing job at explaining the equity market and the bond market. This is two separate things, right? Just like how we are in the stock market, like treasury bonds versus the company that is operating in America, for example, right? Now, company has their own bond market as well. That is the debt market that she is trying to talk about. That is good for AMC as a company. Okay.
That the bonds are trading like the company's going bankrupt. So therefore, AMC and AMC are short. Now, a strange nuance of the equity versus debt markets is typically the equity market shareholders believe that the debt guys are really smart about how to price the debt. That as it relates to bankruptcy, the debt guys tend to know that first. And so this shorting of these two bonds really gave anyone on the AMC or APE side pause. Now, it has historically been the case that when the bonds trade busted, which is trading such that it looks like the debt holder believes they're not getting their principal back, that it's a very bad sign for the equity holder. But in a world where people are not necessarily double checking all these things, you end up with the situation we currently have now, which is going to be a little painful for the shorts. Now, it turns out it only makes sense to short the stocks and the bonds if you're sure this man can't get funding. But what if he can? Now, this is where it can get confusing for retail investors, so I'm going to try to take all the jargon out. If I go to the bank and borrow $100, and during that period of time that I'm borrowing it, my credit score might fluctuate, which is kind of what it means to price that bond in the market. My credit score is fluctuating like crazy. It doesn't matter because at the end of the day, I still owe $100 plus interest payment.
And if I can pay it, we should be all good.
Now, if the bank were to sell my loan to my mother, for example, and my mother says, you know what, Mr. Banker, what do you sell me the loan for? And they say, I'll sell you the loan for $30. Then she could buy the loan. And then because she's my mom, she could just be like, hey, you know what? Just pay me back $30 and the loan is done. I want you to understand how epic this is. I received $100 from the bank. And let's say this loan is 2 years old and I'm just paying $10 each year on it, right? So I received $100. I'm paying the bank $10. So thus far, I've paid 20 bucks on this loan. And my mom is saying, just give me 30 bucks and we'll call it even. That means I get to keep the $70 that the bank gave me minus the 2 interest payments, 20 bucks, so $50. So that 50% remaining, that's just cash for me. How epic is that? And so that's what Mr. Aaron did. He used $30 million of net proceeds to buy back busted up bonds on AMC. Now, he does discuss this pretty clearly in the December 19th release. And then there's more discussion of debt retirement in the December 22nd release. Now, because there's so much in these two releases and you do have some corporate costs that are associated with this, it is going to be a little bit hard to do the math on precisely how bad it is for the shorts that this has happened. Needless to say, though, it's really bad for the shorts. And that is because he did not fund these bond buybacks with cash. Now, I want to talk about how brilliant that is. If he had funded this in cash, the short sellers would just come back and be like, he used all his cash to buy back these bonds, he's totally insolvent. Instead, he went to the equity markets to capitalize this. So that's what's making the press release difficult to read. But essentially, he asked for money from the equity capital markets to, number one, buy back this silly debt, and number two, just have enough extra money in the war chest so that this doesn't happen again. Now, this is something that is highlighted very clearly in the November 19th press release, and it's a little unclear if November 22nd adds even more to the war chest. But if you use the numbers in the release, you'll see very clearly that, first of all, he has more than enough to cover his current liabilities. And also, as a function of paying off some of his debt, he has lower interest expense. Now, all of that mumbo jumbo is really going to mean one thing, and that's this, the short sellers are really going to have to think twice about using the bond markets as a way to get the equity sellers to short the stock. What Mr. Aaron has demonstrated is that if you are dumb enough to give him back his debt at 30 or 40 cents on the dollar, he will find a way to buy it back just so that he can keep the spread of that 60 million or 70 million that you're happy to give him. Now, I got to tell you, just that right there is some straight up CFO boss moves. I mean, it is really next level. However, you're really going to want to watch part 2 because that's where the most misinformation is. The remerger of AMC shares and then the 10-for-1 stock split is going to put the shorts in kind of a nasty spot.
Alright guys, so we just finished a video. Sorry about that, I'm gonna cut this out. But as you could see here, the way that she was explaining to us is that there's equity market and then there's bond market, right? And traditionally, there are school of thoughts out there that thinks that the bond market are usually a lot smarter, a lot smarter than the equity holder. Those equity holder just means AMC holder, APE holder, right? So as a result, they are usually, when they are buying debts of somebody, right? Buying debts of any company, they usually go out in the open market and short the equity itself. It's just their hedging, it's just a strategy that they employ, and I'm not sure if it's legal or illegal, but that's up to the regulator to decide, right? And as a result, you have been seeing that ABE has been going up. Why? And I think it's due to what her explanation is. To her, and I agree, that ABE has become more attractive because the proposal is for ABE to be converted to AMC, right? So however was issued, however many APEs were sold into the market, it's going to be converted back. Now, don't quote me on this, but I heard it's 1-to-1, right? 1-to-1. And that is also my concern as well, because to me, that is an out for shorts right there, right? If it's 1-to-1, and again, don't quote me on this, let's just say the original issuance was somewhere about 500 million shares of APE, right? And let's say, in the filing, we already know that Adam Aaron has been selling, 65, like this amount? I should have looked up, but $110 million at weighted price divided by, so he's sold, let's see, let's just round it off, right? So he sold that much APE to get 100 million, okay? And in doing that, just like May was saying in her video, is to reduce the amount of debt, okay, that he owes. My concern is that it's not going to be enough to keep AMC alive, right? And that's what the bondholder was saying as well. Now, another concern of mine with that as well is the bondholders, right? Now, the bondholders technically could be the hedgee, right? We don't know that. We don't know who buy the bonds. We don't have access to buying that bond. Only the big player, right? And who's the big player? Hedge fund. So why didn't Adam Aaron offer it to us? That's my other concern too. Like, is he on our side or retail side? You see what I mean? Like, and that's the concern that I have. Now, earlier he was selling like 30 million or something. I don't remember. But this, the amount of sale might be more at this point. I think 30 million, some 30 million share of a to raise more money. Let's see. It could be wrong, but just go by this one though, because it's recent. So let's just say that this is all he sold into the market right now, and now it's being proposed. Let's say it's 1-to-1. So now the flow is almost like, if this is going through, he wants to increase that share count to 1.2 billion shares. Okay, so he wants to increase that to 1.2 billion share, and after that he wants to cut it into tenths. Okay, 1/10 of that. So 1/10 of 1 billion, 1.2 billion. Okay, 1.2 billion. That's million, billion, divided by 10. So he wants to get the float up to the previous, right, to that price, I mean to the lower float again, right? Now, depends on how high, you know, Abe will go at the time of conversion. And AMC, I'm sure they will try to short AMC at this junction from now on. So AMC might fall down to $2, because, you know, you see like people were betting against it. So at the time of conversion, AMC might be at $2. Abe might be higher because now people are more inclined to buy Abe because they feel like Abe is more shorted, right? It's more shorted than any other, and it's cheaper to buy, just like May was saying, and that's why she owned most Abes. And I kind of agree, but I think, you know, as far as MOAS go, I don't think it will happen with Abe. And then the whole thing where, oh, short has to close. Do they? Look at MTLP debacle, right? It's like they just do U3 halt on the stock, and now they're still, you know, going through that. So the minute that the short has to close because they're going private, they always find ways to impede that from happening. Do you think they're not going to do that to Abe, even if they're forced to close Abe? Right? It's, yeah. I don't think it's good for retail, especially what we want in this movement, right? Yeah. So that's just my concern, is that number one, the bond buyer, the people that bought the bond from the bondholder, you know, whoever wanted out, you know, from AMC bond, could be bought by the hedge fund who short this thing to oblivion, right? And like I said before, with this, now they have a chance, or whoever bought that amount of share right there, right? Amount of apes, is now going to have more shares to sell into this float right here. Now it cut by 10th, right? Instead of 160 million share, now they only have 16 million share, right? 16 million shares. That is a hefty amount to short into this float right here. You see what I mean? So, and then on top of that, you know, they could also do sorts of underhanded things where, I think that's 10%. I mean, how many percentage of the company is that? You know, that's a lot. That's a lot. And my point as well, as I pointed out, why didn't he offer that to retail? Why did he do this backdoor deal that doesn't seem, I don't know, I just feel fishy at this moment. So I don't know. Man, I am so torn on this, you know. Apes was supposed to run, and it never did. I know, corruption. What makes you think that they're gonna stop doing that? You know, if they're forced to close, look at MMTLP. They were supposed to force to close, but then, you know, FINRA did a U3 on them, right? 2 days before they had to do that. And then we have this ex-CEO of Torchlight coming out and say, hey, you know, we told you this, that this share was not supposed to be traded, but, you know, you didn't do anything. You said, oh, it's perfectly legal and it's too late for that. It's already been traded. And you did nothing, but all of a sudden, you three halt due to, unforeseen market event, right? Or and we're trying to protect retail investor. Let's not. They never do, right? What makes you think that Abe is not going to be the same if they were forced to close, right? At some point, right? I don't know if that's even true. Like, wouldn't they just transfer that short into AMC, right? You see what I mean? Yeah, you get, let's say AMC traded $2 right now, and by the end of this will trade at $5, right? I don't know. Look, don't hate on me, but let's say $5, right? So, and then it convert into AMC. So now combined it would be $7. When they split, the share would be, the float would be less, but the price would be trading at $70 a share, okay, per share, but the float would be less, okay. Now that's assuming that both of them, okay, will be trading at $7, okay. If it runs up to $10, $15, and then, you know, it end up being 17, then it would be $100 a share. In which case, short would have a field day on this. Right? Short would have a field day on this. And Adam Aaron could sell into that too, as he always do with everything that we own. So is that really good for retail though? You see what I mean? So that's why I'm torn. I am so torn with this, and I smell this ever since they were issuing Abe, because I just felt like it was a grift felt like it was a distraction to the dividend split, right? And people were like, "Whoa, GME doesn't do anything after the split. Look at that, not a run." Well, look at the volume. Look at the volume at GME. I'll do the video on that one soon, because I think people are overlooking the last quarter, and I'll show you how the media is like kind of like sweating bullet at the moment with the GME earning. So I don't know, fishy. All right, I'm gonna end it here.